Douglas Isles, one of Platinum's investment specialists, will provide a June quarterly overview of the Platinum International Fund. Douglas, can we start with an overview of markets, as it appeared that confidence was increasing right up until the final days of the quarter when we received the results of the Brexit vote?
Yeah, Justin, I think that's probably exaggerating a little bit. I think what we saw a growth scare back in February, and then we saw markets pretty quickly rebound from that. And I think it would be really a very gradual increase in confidence in reality through the quarter, but definitely there was a shearing when Brexit came along. And I think Brexit was interesting because it was a surprise. It was a surprise to us. It was a surprise to financial markets more broadly. Very explainable in that it was a response, if you like, to migration was a big issue. It was a response to the pressures of globalization on higher Western wages. It was a sense of probably disappointment with the EU. So it was very predictable, very explainable, but it still came as a surprise to markets. So it was a sharp response. But the good thing is, as we've moved into this quarter, as we moved into July, we've seen markets have generally recovered most of the losses that were inflicted by Brexit, other than really the British pound, which was a natural victim of such a decision.
What changes have the portfolio managers, Kerr Neilson and Andrew Clifford, made during the quarter?
Yeah, I think, Justin, there's probably three things to highlight. The first of these was continuing to add to our exposure to the oil industry. We own today Eni in Italy and Inpex in Japan, particularly for its assets in the Ichthys project off the coast of Australia. So we continue to add to that area. It looks like oil's very quickly moved from being in massive oversupply to quite tight, actually, the supply-demand dynamics. The other thing was we reintroduced Johnson & Johnson to the portfolio. This is a high-quality company, one of the very few US companies with a AAA rating, in fact, one of only two. Trades on a discount to the market, and we think there's some positive things happening in both the consumer and the medical technology businesses. This is a company we've owned before and one which we very much like and respect. And the third thing was really in response to Brexit. Big sell-off in European banks. We own Lloyds, we own Intesa and Mediobanca in Italy, and the very, very sharp reaction gave us an opportunity to invest further in companies that we know very well and which we like, and we thought, given the opportunity, it was prudent to add to these positions.
Looking ahead, what do we believe are the potential impacts on markets, and how are we positioning ourselves?
Yeah, Justin, I describe the portfolio today as being quite cautiously positioned. We're sort of still in the mid to high 70s in terms of our market exposure. We were higher through most of the sort of earlier part of the bull market, 2012 to 15. In the currency markets, we don't have particularly large positions other than protection on the Chinese currency. We own a little bit of Aussie, but we expect we'll probably have a chance to remove that if it does trade much higher than it is today. But really the key thing is trying to capture some of the undervaluation of the growth story in Asia. So we've got a lot of the portfolio still in the Asia-Pacific region. The European banks I mentioned on the back of Brexit being interesting. And then in the US, our portfolio is dominated by technology, and some of the main leaders there, companies like Google and PayPal, are very important to our portfolio.
Thank you, Douglas. For the full written report from the fund's portfolio managers, Kerr Neilson and Andrew Clifford, please visit our website.